Hello traders, it's Samurai Trader here. Welcome to this training session. In this session I'm going to be discussing chart patterns, specifically ascending and descending triangles, learning how to incorporate chart patterns in your trading and to recognize these patterns as you trade will improve your bottom line dramatically. So as we get underway, I do need to put the risk disclaimer up. If you haven't read one of my risk disclaimers, please pause the video. There is a risk, of course, in trading. If you're a current member and you haven't read it for a while, please pause the video and reread the disclaimer. Just a very quick advertisement and we'll move on. If you haven't already subscribed to my channel, that is if you're watching one of my videos for the first time or this video for the first time, please subscribe and you'll be kept up to date as I release new public videos. Of course, for my members, we have an exclusive range of videos which are for members only. If you visit my website, you'll be able to request my free ebook, The Truth About Day Trading, and most importantly, for $197 you obtain all of my setups, indicators for a whole range of different trading platforms and over 100 hours of online training instructions, etc. It is the most comprehensive program you'll ever come across. End of advertisement. Let's now get into the education side of it. First of all, I just need to remind members that in the members area under the trading ebooks section, there are 4 or 5 excellent books there, or reports or chart pattern examples. So please visit the members area to review the books on trading chart patterns. So as you've probably heard me say on previous recordings, day and swing trading is really a pattern solving exercise. Virtually every trading setup that we trade, whether it be the T1, the T2, the 19, the T3, they're all patterns. They're patterns, geometric patterns that appear in the market each and every day. Now we'll quite often use indicators with some of those. Others are purely visual. Now when you're using or drawing in trend lines, it'll make it easier for you to recognize other patterns that appear in the market, such as ascending and descending triangles. And as you're about to see, they're very easy to learn, but can be very profitable. So drawing in trend lines as you trade and learning to recognize patterns as they set up can really help you catch the big moves. Now developing the habit of drawing in trend lines as possible patterns as they form give you a major advantage over the majority of traders in the market. What I've got there on the chart there, we can see we've got a flagpole, a pennant, a falling wedge, and what you'll notice with pennants and falling wedges, you'll notice the narrowing of what we call the trading range. The energy is building up, and with many of these you'll have an explosive breakout. So chart patterns give you a visual clue of where the market is heading. When you use them in combination with technical indicators to confirm existing signals, can dramatically improve the win-loss ratios. Now I really recommend this. Try just to learn 1 or 2 of the major patterns, such as ascending and descending triangles or double tops and bottoms, before attempting to identify some of the more complex patterns. When you look at and review some of the books on patterns, you'll see there's literally dozens of them and dozens of different types of formations, etc. So if you try to take them all in at once, it can be a little confusing. So really focus on just a couple, and the ones I recommend are really the triangles and the double tops and double bottoms. They're probably 2 of the most profitable patterns that appear in the market, in basically every market every day, whether you trade Forex, futures, or stocks. So chart patterns, when used with common sense, can give your trading an edge, and an edge is all you need to make money. Let's now talk about very quickly drawing of trend lines, because what I want you to do is, as you trade, is to be drawing trend lines in. So technical traders use trend lines to identify trend direction, levels of support and resistance. Now I'm going to do a separate video on channel trading and using channels, because we could easily devote another 30 minutes just talking about channels. So I'm going to do a separate video on that one. But there is a right and a wrong way of drawing trend lines, and this is what I recommend. Is that you may notice a diagram on the right there and the green circles. If any of you have viewed my video on fractal points, you'll see they're actual fractal points. Now, to make it simple, a fractal point is when you have two higher candles or lower candles on either side. So the ones up top here, we can see we've got two higher candles, two high candles. If you want to make drawing of trend lines and patterns very mechanical, aim for the fractal points. It just makes your trading very mechanical in nature if you do that. Now, what it comes down to is that ascending and descending triangles are really triangles and wedges combined, and they're very close together. So you'll see that as they narrow, price action is getting tighter and tighter. It's really a narrowing of the trading range, and they're really continuation patterns. Now, they don't always work out. That is, we say that with an ascending triangle, we're expecting a break to the long side, descending to the short side. Well, it's probably 60% right, but you'll quite often see it trades the other way. And that's where, at least if you're prepared for a breakout, or you know that the energy is building, you can be prepared. So what you're really looking for is these key points as they come together. You just want to be prepared also, though, that it may break out before the points actually intersect. So you'll soon get used to that once you recognize them. So when we see a descending or ascending triangle forming, we know with a high degree of certainty that the market is building up energy for the next move or breakout. The market has entered a trading range and is narrowing. Learning to recognize and trade these patterns in real time allows you to prepare to enter a trade well in advance. If you're a day trader, of course, time is not on your side normally. That is, when you get a breakout, you get a breakout, and sometimes if the market has been coiling, it's a very fast breakout. And as I point out in the bottom slide here, a high percentage of descending and ascending triangle breakouts result in an extended or explosive move, so it can be very profitable. So ascending and descending triangles, the ascending triangle is a variation of a symmetrical triangle. Ascending triangles are generally considered bullish and are most reliable when found in an uptrend. The top part of a triangle appears flat, while the bottom part of a triangle has an upward slant. And you can see there's basically two triangles here within the one. That is, you can see a smaller one, you've got the bigger picture, and you've then got a smaller one forming. Now, I must say also, when you draw a pattern or a triangle or a double bottom or double top, it really doesn't matter. Close enough is good enough. They don't have to be perfect, so just be aware of that. Now, if we take the descending triangle, it's also a variation of a symmetrical triangle. It's generally considered bearish and is usually found in downtrends. Unlike the ascending triangle, this time the bottom part of a triangle appears flat. Now, I'm going to show you a couple of quick snapshots from some charts in a moment, and these flat areas quite often they might be a pivot point or a floor pivot. So quite often you'll see there you've come down, you've bounced off the pivot, tested it 3 or 4 times before finally you get a break. But what you want to be aware of too, at times it'll go down and test the floor pivot 2 or 3 times, maybe 4 or 5, and then break to the opposite direction as well, because the sellers just don't follow through. But the advantage is, irrespective of which direction you have the breakout, you're prepared because you know the energy is building. Now, here's an example where patterns don't have to be perfect. So you can see with the upper trend line heading down that there's a variance of a couple of ticks between the highs, and on the low, the flat trend line, we can see there that extended over to the left, it's within a tick. So it's not perfect, but you've got the formation of a triangle setting up. Now, that was an $80 move. Now it just dropped $80, 8 ticks. This is on CL itself. Then it bounced in the other direction. Here is one where it bounced straight away in the opposite direction. So rather go to the short side, which this formation generally has happened, it bounced to the long side, but you were prepared for it because you could see price action narrowing, the energy was building, and of course you're aware that you can get a breakout to either the long side or the short side, so you're prepared for it. Here we've got a quick $100 move. We can see here that we had support over 1 2 3 over 7 or 8 candles coming down, hitting our lower trend line, and we could see a narrowing of price action. So what we see is a narrowing of the trading range, and we're well prepared. Now for our members here, you would have used a 34 bounce to enter this particular trade. In actual fact, there's a couple of opportunities there with a 34 bounce being prepared for it. Now it's a little bit like when you're trading floor pivots. What you've got to be very cautious of is trading up against support, that is shorting when you're right at support. Ideally you want to be buying when you're at support, but this is something we teach in the Day Traders Fast Track program. But I think hopefully with these patterns you're starting to get the general idea. Now the black dots, by the way, are fractal points. So I have an indicator on my TradeStation platform that plots the black dots as a fractal point, and it just makes it easier when you're drawing in trend lines. So you've then got wedges. Now wedges are a little different, of course, to the pennants, to the pennants and to the triangles, but they're all similar type, similar outcome. What you can see here is they're rising and one's falling, and of course pressure is building as they get closer. So once again, in some of the books that we have on our website, we go into they go into great detail some of these various patterns. So traders, that's the end of this video. So it was a very quick 14-minute rundown on patterns, and of course we could spend hours running through these patterns. So the next video I'm going to do is on trading channels, and we draw channels in every day as we trade, particularly on our higher time frame on our anchor chart, because by drawing in a channel on our anchor chart, very quickly we can glance over to the right where we have our anchor chart situated, and we can see immediately what direction the overall higher time frame is heading in. So once again, if you haven't subscribed to my channel, please do. Please visit my website for more information about the Day Traders Fast Track program. Thank you very much.